Goldman Sachs had $527 billion in their equity portfolio at the end of Q1 of 2025. If you're time poor and you just want to know what the smart money is doing, don't worry, I got you. In this video, we're going to look at Goldman Sachs's end of quarter portfolio, the big allocations they made, general composition, as well as what that means for general market trends. My name is Amrit. I created a site called Wall Street Rank to help people like you understand what hedge funds and institutional investors are doing in the market to help your due diligence process. So who is Goldman Sachs anyway? Well, it's an entity that traces back to 1869. That's over 150 years of shaping what today is the modern financial system. They have 2,000 highly qualified professionals across 34 countries advising on trillions of deals and assets under management. Their clients are typically high net worth individuals, institutions, and even governments. Okay, so why should we care? Well, the company did $15 billion of revenue in Q1 of 2025, and 30% of that was profit. And the interesting part was that $4 billion of that was from equity trading. Yes, the company spent $650 million on research, and they have about 360 of the smartest people being analysts, building networks, and aggregating information. I think they know a little bit about investing. If you look at the stock price in the past 5 years, it's up 260%. Okay, so what are the largest positions in this portfolio? Well, the top 5 make up 13% of the entire portfolio. And you'll see a mix of mega caps as well as ETFs, but within the mega caps, you'll see a trend of just monopoly businesses in terms of pricing power, as well as AI infrastructure. Now, Apple is their largest single position, but they did trim it by about $500 million. Now, this is quite consistent with other funds as well as retail sentiment, just citing lack of innovation. SPY, which is their second largest position, was quite interesting because back in Q1 of the year, you've noticed a lot of turbulent news and there was a market sell-off, but Goldman doubled down. They added $1.5 billion in their position. And if you look at SPY in the last month, it's rebounded 5%, signaling a broader market recovery, which they had the foresight to see. Microsoft, of course, it's a no-brainer play. They power a lot of the internet infrastructure, especially with their partnership with OpenAI, so they've doubled down on that. Nvidia is an interesting one. It looks like they have reduced their position, but if you look at their analyst ratings and price targets, especially forward-looking, it seems like they're very bullish. So I would think this is profit-taking. Amazon's an interesting one, and I think it's very forward-looking just by the fact that Amazon recently announced humanoid robots to do robot delivery and replace humans, and also infusing all their in-house AI into their warehouses to make the whole process more efficient. So that's a one to watch out for. I think that's a forward-looking bet. So where is Goldman doubling down on? ETFs, essentially a broader market recovery. Now, while SPY was a big bet for them, they've made an even bigger bet into the Russell 2000, which represents small cap stocks, which got decimated last year. But a lot of those businesses are undervalued, and potentially with the impending rate cuts, we'll see big gains. And they've allocated $1.5 billion, which is about a 51% increase. So probably their biggest bet in this portfolio in terms of doubling down on small caps. Now, tied to that broader market recovery is consumer. They have big bets in Amazon, Walmart, both around the 500 million mark, and then Nike at $1 billion. Now, this could signal their hope of a rate cut coming in and spurring consumer spending and that sector improving. Okay, speaking of rate cuts, take a look at the sector composition of Goldman's portfolio. The second and third sectors they have most exposure to are financial services being 11.42% and consumer discretionary being 8.68%. Now, we looked at some of their past bets and we implied that there's rate cut readiness built into it. Now, if you look at financial services firms, when rates fall, they lend more and they make more fees. And consumers, they take that borrowed money and they spend it in the economy. And so consumer discretionary companies do well. Let's look at what their bets have been within these sectors. And there you have it, massive investments into North American banks, specifically Canadian banks. If you notice, a lot of these banks like Royal Bank of Canada, Toronto Dominion, and I believe Bank of Montreal, the positions have doubled of what they used to be, or sometimes even tripled, which is super interesting. So if you look at consumer discretionary, you're going to see some familiar names, even Amazon, Alibaba, and then if you go to consumer staples, you're going to see a big bet in Walmart, which plays into that whole narrative about them seeing an impending rate cut and seeing consumer spending going up again, and that these stocks could potentially benefit. So at the beginning of this video, I promised you a surprise bet by Goldman. And if you watched this far, you've noticed that a lot of their bets have been in the broader market recovery, but they made one emerging market bet. The company is called Millicom and the brand is Tigo, which is a wireless carrier in South America. Now, I'll let you go do your own research on that stock, but if you noticed, it was their second biggest new investment for the quarter. So I was curious what other funds were doing in terms of this stock, so I took a look. Millicom is up about 50% since January, and they had 9x the amount of first-time investments from funds than exits. They had 5x the amount of capital that went into Millicom just in the last quarter. A whole bunch of funds added it to their top 10 in their portfolio, and they had about 3x the amount of increases in exposure and reduction. So I'm not gonna give you an analysis of this stock, but it was a very interesting investment considering the general trends. I would urge you to take a look at Tigo. Okay, so it's safe to say that Goldman Sachs is bullish on the US economy for the foreseeable future with investments across multiple ETFs, a special interest in small cap ETFs that may be undervalued right now. And of course, this thesis that we see with investments in the consumer space as well as financials, thinking that there may be rate cuts around the corner that can benefit these stocks. And of course, we covered that surprise bet in Latam, and it's interesting to see how that plays out. But in general, I think future focus, they're looking at defensible businesses that have monopoly pricing power, and AI infrastructure seems to weave itself into that thesis as well. Okay, so if you enjoy that portfolio breakdown, next up, I'm doing WorldQuant. It's a mysterious algo trading firm on Wall Street that employs thousands of PhDs, math, data, and tech at the center of the investment process. The founder, Igor Tolchinsky, he was on Forbes magazine last month, and they make some very interesting bets. If you don't want to miss it, hit the subscribe button. Cheers.